And looks like we're good to go. Hello, everybody. I'm just going to make a quick illustration video on the indicators of the BTTM template, aka Beat the Market Maker template. All right. So, once you're done installing, it's going to be a naked chart. Okay. So it's not going to look like this. Okay. It's not going to look like this. So what I want you to do is go over here. All right. Go to, go right click your mouse, go to template, and go to this one right here, 15 FXEM with stop hunt. All right. Right there. This one. Once you click right there, this one right there, you're good to go, and you'll have this pop out. All right. Next. So we have a couple of indicators on here, which I'm going to describe the best way I can. All right. So the first one would be the ADR. The ADR stands for the average daily range. That's what the market maker moves and is anticipated to move for the day. So example, as you see here, the ADR for today was 78, okay? And it blew the ADR. It's at 117. So that is why you see the red lines pop out, okay? So from this area to here, they broke past the area, I don't know, like 20 pips, I think. All right, so that's what that means. That's what the ADR is for, okay? The boxes, the market maker boxes is Asia and New York, 2 boxes. All right, so Asia, what is the purpose of the Asian box? The purpose of the Asian box is most of the time when there's a reversal, right? Example, let's say here you want your 1, 2, 3 vectors and you get your M out the box, you scan for proper channel size of 33 pips, blah, blah, right? All that good stuff. So that's what the Asian box is for. So once you're out of the Asian box, you start looking for the 3 vectors out the box and so on and so forth, depending where you are in the cycle as well. All right. And for New York, also another reversal kind of box, I say. Okay, that's what the same thing is for. This is for reversal right there. So example, you catch this and you see a reversal with the New York box. Looks like you can be good to go. All right. So that's what it is for. It's really not a big deal. You don't have to have the boxes. You can take them off. All right. That's what the boxes I use them for. Okay. You don't have to have them. Okay. Moving averages. So the moving averages that we have are 5, 13, 50, 200, and the 800, okay? It's the mustard, ketchup, water, mayo, and the blueberry, okay? So water, mayo, blueberry, okay? So these moving averages, they're in my training videos, but pretty much a quick description. They just help out with reversals, help you guide you in the levels, price, and so on and so forth on those. Okay, so that's the moving averages. The high and low indicator. The high and low indicator present themselves every day. Okay, so as you can see here, this is your low. All right, so this is YL, yesterday's low, okay? So this is your low of the day, okay? So this is where we start to look for longs. This is what this indicator for. It's a blue tracer, and we're looking for longs, okay? Same if price was here, we're looking for shorts, okay? That's what the indicator is for, the high and low. All right, I get to the full detail in the training videos, so don't worry about that, all right? So that's what the high and low indicator is for. The TDI. TDI stands for Traders Dynamic Index, and it's kind of like a RSI on the, I'd say, over 9,000 power level. All right, kind of like you have your market baseline, you have your moving average, your 13 right here, you have your volatility bands, and your and the RSI, the green. Okay, so these help you out with shark fins, stop on high, hold the Mayo, and so on and so forth. So this is your TDI right here. Okay, that's your TDI right there. That comes with the template. All right, now stop hunt boxes. Some people get confused with the stop hunt boxes and the shadow boxes. All right, so the stop hunt boxes are these gray ones that are kind of like far away from price. All right, the purpose of these is that when price, example, if they did their vectors out the Asian box and they gave you a stop hunt with the peak formation low that has been locked in, that's what it's for. Okay, this is for a reversal. Okay, this is for, let's just say that the wanted to drop price right out of the box. This is I believe 50 pips out the Asian, right? This is 50 pips from here, 25. And yeah, this is what the purpose of this is for. Okay, so price can go here and here and here. This does not mean that it will reverse though, but it is a guide to help you. Okay, to help you. All right. And now the shadow box, aka excuse me, this is for the Brinks, baby. The Brinks trade. All right. So example, let's say you get a second leg M or W and lines up with the appropriate timings that I discussed in the training videos, and you have the shadow box locked in. You got the Brinks, baby. They're gonna pay you today. Back up the Brinks truck. All right, so that's what the stop hunt box is for. All right, which are these right here. You have two of them that present themselves each day as well. One for London right out of the box and one for New York. All right. Right, same thing, right? One for the London, one for New York. Okay, that's what that's for. Now let's go slide a little bit to the right now, and let's look at these indicators over here. Okay, the ask is price, bid is price, the spread is 1.5. HOD and LODs are just pretty much where price is at right now. Okay, this is where they at. Here where it says, excuse me, let me get some of this clearing out. Where it says TDR, this pretty just stands for today's daily range, which is right here. We can look to the left is 117. And also over here where it says YDR, yesterday's daily range, okay, was 92. All right, and then these right here, these are important, so don't even worry about those. Ignore them. All right, this, ignore it as well. Okay. Also, right here, 3-ton now, 3x ADR. Whenever you become a swing trader, you can possibly use this, but it's not necessary. Okay, you don't have to use it. But pretty much 3x ADR means that whenever you're swing trading, example, let's say you cash the peak formation low of the week or peak formation high, you expect 3 days or 2.5 days of rise or fall, right? So the 3x ADR would be used as an, okay, so this is the ADR, so I'm expecting about a 235 pip move of rise or fall, and depending if the ADR has been filled in the 2.5 or 3 days, or the timing has been met, you can start looking for your exit, if that makes sense. Okay, so is it necessary? No, it's not necessary, but it's just a tool to guide you. Okay, it's not necessary. If you want to say, I feel all this looks too complicated, just ignore it. All right. Now, candle time. Okay, candle time, it tells you how many minutes are left on the candle of each candle. 15-minute chart, of course. All right. And one last thing, whenever you enter a trade, you will have here trade 1, how many pips you are up, and trade 2, how many pips, blah, blah, you're up or down. Okay. So yeah, guys, this is the indicators. All right. I go into full detail in them in the training. So yeah, I see you guys soon. Thank you, guys.